we had a question about the M&A landscape and just what's going on in, with strategics right now, and then will things change? Will some strategics be looking at smaller, high revenue, high growth businesses as potential acquisition candidates, or will there be a certain size threshold? Do you have to be 50 million? Do you have to be 100 million? Will there be the opportunities for that, 10 to $20 million business to get acquired as well?
I can jump in. So one thing I would say is that the question is about the strategics, but I think that part of the answer is the fact that what a strategic is changing quickly. So I think one thing I mentioned, the 24, 30 months before COVID and how the big strategics seemed a little bit less interested. What we're seeing more and more of, and I'm doing a couple of these deals right now, where it's not a big company buying a little company, or maybe it's a medium-sized company buying a little, or somewhere between little and medium. So the $20 million revenue company just might not be interesting to General Mills, because what do you do with it? Do they end up ruining it because it's so small? And of course, it doesn't move the needle. However, if you're a company that's doing $100 million and you want to start, going into slightly different areas, or you want to start, or you think you can create, get rid of redundancies and costs by doing smart acquisitions, that's what we're seeing a lot of. And we're seeing that with some beverage companies, medium-sized beverage companies. We're seeing it in the snacking arena. We're also seeing a couple different private equity funds start to roll up brands. We know VMG is looking to do that. And, we saw Sonoma with Crave and some other things that they're doing. So I think that the rules maybe haven't changed, that if you're too small, the big strategics aren't going to look at you. But there's more than one way to skin a cat, and those opportunities are becoming more and more common. And now, maybe a third of our deals are medium-sized companies buying smaller ones, and a third of our deals are private equity funds buying companies. And then the last third is maybe the strategic. So in a sense, more buyers are coming in the market. And I think that's a really positive thing. And those buyers don't all necessarily look at the same thing.
Yeah, I think it's well said.
Yeah, I would say, Mike, we've seen also our clients finding, new channels of distribution, right? Not just growing their own online businesses, which most of them have, but also, meal kits and other type of ways to get your product out there, which has been higher margin business, reducing reliance on heavy promotional spending, which improves margins, which the strategics love when they come in, or the larger private equity funds love, that you can show them that you can, get product out and sold and in consumers' hands with less promotional dollars is always a big win. And we're seeing that as well as a result of COVID.
Yep.
Hey, Mike, one thing, I think Nick's points were really good. And just to kind of take a step back, if large strategics are waiting to buy growth companies when they're closer to the size brands that they like to manage, which are, call it 300 million and above. So instead of buying at 35 or 50 million revenue, maybe they want to buy closer to 100 if they can. And, obviously it gets harder and harder to grow companies, right? As a founder or a, whatever management team, as companies get larger, there's this opportunity. There's this kind of gap in the market. And, Nick's point about private equity entering that is great. I think that's right. We're seeing more and more SPACs. A SPAC is a special purpose acquisition corp. It's basically a public shell company whose sole purpose is to buy one company. And usually that company right now in today's market is 100 million revenue or more. And it may not have the growth story that you would need to go through a regular IPO, but you can get bought by a SPAC. And the great thing about SPACs is once they get that deal done, they're now another buyer. And we're seeing more and more of these SPACs coming into the market. And I think, the great thing about our economy is where there's an opportunity, and we have a fundamentally good, business model, which is a branded product business, and the opportunity being companies that are in that, call it 50 to whatever, $150 million range that, need a partner or want a partner or are better off with a partner, that opportunity is going to get filled. So we're seeing it filled with private equity, SPACs, medium-sized buyers. I think over the next 12 to 18 months or next year or two or whatever, we're going to see other, much more of those, but other types of buyers moving in to fulfill that.